Carlos Cuerpo, Minister of Economy, Trade and Business for Spain. Thank you so much for joining CNBC here at the IMF World Bank annual meetings. And let me kick off with the economic growth that Spain has been witnessing. It's been leading the Eurozone, now forecast to grow 2.7% this year. What is behind this strong growth story?
Well, we're actually leading amongst major advanced economies for the second year in a row. We just had this upgrade in the outlook from the IMF to 2.9. It's even above our 2.7 from the Spanish government. So it's actually very good news, which is on the back of a very strong growth performance over the past few years, and also a very good outlook for the next future. And this strong performance is translated into confidence, which is something essential for our economies. Confidence from analysts, from markets, from investors, and also from rating agencies. We just had 3 upgrades from rating agencies, from Fitch, Standard & Poor's, and also Moody's over the past 3 weeks. So again, this is all convoluted into a very positive message on the Spanish economy, on the back of a competitive economy, because we have a strong bet for green and digital investments and structural reforms. We also have the protection of our welfare state and strong fiscal responsibility. That's a positive feedback loop that is actually instilling these strong growth forces.
Some of the forecasts, though, were suggesting a more subdued rate of growth next year, a more normalizing level of growth. Do you see that pace coming through, and where do you see the slight slowdown occurring?
Well, actually, we've been growing above 3% for the past years, and what we see for the medium term is that we will slowly converge to our potential growth rate, which has been lifted upwards thanks to the modernization of our economy. So our potential growth rate now is around 2%, we estimate, and this is very good news when it comes to the sustainability of public finances also going ahead.
One glaringly obvious challenge is the unemployment rate, still above 10%. This has been a persistent issue. Structural challenges have been cited when it comes to the labour market. What can you do to correct that imbalance?
Well, we've been bringing down unemployment for the past 7 years. It was in 2018 above 15%, now it's slightly above 10%. And the good thing is that we are actually gaining space, we're bringing unemployment down on a permanent level. So it's actually structural gains because we're growing, as I said, in a balanced manner. This was not the case before the global financial crisis, where we had also lower unemployment rates, but it was completely imbalanced, and thus we suffered tremendously. Now we're growing balanced, in a balanced manner, and every little bit that we gain on unemployment is a structural gain, and we are foreseen to actually go below 10% and even reach 8% by the end of this term in 2027.
Let me ask you about Europe-wide, because you've been behind many endeavours to try and improve the competitive position of Europe, proposing a number of different ideas. But the criticism still is that Europe is moving too slowly when it comes to red tape, bureaucracy, the structural challenges. What do you want to see happen going into 2026?
Well, we've been advocating really to take very seriously the Draghi report and the Letta report, because there is this call for urgent measures, and Spain is trying to push the EU towards where there is consensus, which is following up this roadmap. And we've been putting together what we call the competitiveness lab, which is a governance tool that allows us to move in coalitions of the willing. That is, whenever there is a few member states who want to make progress on a specific project, be it capital markets union project or single market project, then we can do it like in a sandbox. And as we will be moving along, more countries can actually chip in, can join this initiative, and thus we can build also bottom-up the European Union integration projects. We can build the single market together with the efforts from the European Commission, which usually come top-down. It's very difficult to go from a fragmentation of 27 to 1 in one go. So we might actually want to take few steps and go from bottom up as well.
It sounds like a technology incubator. Indeed. In many ways, this competitiveness lab. Let me ask you about what are the initiatives so far that you've seen come out of this laboratory?
Well, as I said, we're starting with the Savings and Investment Union, which is the Capital Markets Union project, where we're putting together what we call the Finance Europe label, which is a label that will actually be in specific investment products in 7 countries throughout the EU now, where these products actually share a few common features. For example, one of them is that particular savings or share of savings will be invested, 70% of it will be invested in European projects, so that our savings do not go abroad to finance other people's projects. So that's one feature. And then the other one is that they will be actually benefiting from specific beneficial fiscal treatment as well, so that we instill as a positive incentives from our citizens to gear their savings towards our own real investment projects.
That's one initiative to ensure that Europe can tap the single market, get the benefits of such a large trading bloc. What comes next? What else do you want to see happen urgently?
Yes, also we are putting together initiatives to tap on the single market. You know, we have 450 million consumers, and that's a huge potential that we have to tap into. You know, for example, when we look at what Spanish companies are doing, they're investing more for the past 10 years in a country like Uruguay, which is an important country in the Mercosur bloc, and we've put a lot of stress into and strategic importance into Mercosur, but they're investing more in Uruguay than in all the Eastern European bloc. Taking into account, for example, that Poland is 10 times the size of Uruguay. So that really means there's a lot of untapped potential in really getting to the full extent of the European Union single market. So we're bringing down barriers together with our colleagues. We will be, for example, working with our Portuguese friends to work on a single Iberian market, again, as a first steps to really getting into what Enrico Letta calls the 28th regime, which is a one and single regime for the whole Europe.
Given how pro-European you are and all the initiatives that you've been working on to ensure the bloc is stronger, it's still at odds with the opposition we've seen on the ground in Spain around banking consolidation. We've spoken about this a number of times, and the latest is that BBVA has not had much success in consolidating Sabadell. Sabadell shareholders rejecting the overtures from BBVA. Why are you so opposed to this consolidation when Brussels is very clear that it wants to see consolidation of banks in Europe?
Well, first let me just remind the audience that we're talking about an intra-Spanish consolidation. This is not a pan-European consolidation. There are two Spanish banks. Therefore, the relevant market is the Spanish market. And of course, what I did voice was our concern about the potential impacts on competition, also potential impact on consumers, on also workers of both companies, on credit flow into SMEs from those two financial institutions. In the end, what we've been doing is following strictly what our law provides for, which is protecting the general interests. We did put together specific conditions for BBVA to go ahead. They did go ahead after we did put those conditions, and now it's a time for shareholders to decide. We're waiting for the final number to see actually what happens and whether these will actually go through. But this is a market-based time, and what we've done from the government, again, is protect general interest. And what we've seen after BBVA decided to go ahead is that both things are compatible, the interest for shareholders and the national or general interest. And I think this is a good precedent.
Brussels had threatened to show some teeth on this. Legal warnings, for instance, over summer, demands that you drop some of the obstacles that were in the way around these bank tie-ups. And it's not just Spain, it's Italy as well. It suggests that some of the member states are at loggerheads with Brussels over bank consolidation. Does something need to change here? Because it feels as though the position is not in lockstep.
Well, we're not preventing any operation from happening. As I said, we're just trying to protect, and the general, our law actually provides for it. We're trying to protect the general interest, and this is important. And actually, as I said, the operation actually did go ahead after we did impose those conditions. But what we want is that in the end, we want, of course, a strong, concentrated financial sector that can compete internationally, that is very competitive. But also in that process, we should not forget that the financial sector needs to be diversified in our countries as well. We need medium or smaller size also banks and cooperatives to be able to provide for this close link with SMEs, with customers, because that's also important on the way. We need to protect that specific bit, which has to do also, of course, with the way that clients can access those services, which are of essence for them.
And let me change tack and tackle some of the biggest issues of the day. Trade tariffs. Europe has an agreement with the United States, but that said, there's still significant uncertainty in the macroeconomic world. How are the tariffs catching up with Spain?
Well, so far we have not seen any major or significant impact in terms of our trade figure, but it's also true that it's a bit soon to have a full extent of the impact of this increase in fragmentation and this increase in tariffs. We will be monitoring very closely for the next few quarters as well, but there's a lot of distortion in the data. First quarter there was a lot of accumulation in, of course, anticipation of the tariffs. Then we have to see actually what happens. Also, the direct exposure of Spain is rather limited. around 5% of our total exports, more indirect exposure throughout our trade with main EU partners like Germany or France, but so far it's been contained, and in any case, in a preventive manner, we put together a specific support program for our company so that they can navigate in these very uncertain times with financial measures to help them, but also with a lot of information and intelligence, economic and trade intelligence, so that they can take advantage of these opportunities as well at this point.
Big picture, Spain has also been somewhat reliant on China over the years for its supply chain. And the China Plus One story was a moment where a lot of countries rewired their entire supply chain. Now we have the US tariffs as well on top of what already has occurred previously. How do you think Spanish companies are reordering their supply chain? Is it happening in any great way?
Well, what we've seen so far is that the Spanish companies are very resilient, and you look at our export numbers, both in terms of merchandise trade and also services, we are actually having record numbers. For example, in merchandise trade, we've been able to keep our international share despite what is happening to other advanced economies, which are actually dropping or having seen a drop in their export shares. So that talks a lot about the very competitive external sector in Spain, which has to do with our bet also for renewable energies and drop in their costs, which has to do with very highly skilled human capital. Well, many things are happening at the same time that ensure that our external sector is being competitive, but we have to look forward, of course, and reduce dependencies on where we see that those critical choke points might be going ahead.
I want to ask you about the European defence programme, because Spain has not been as willing to commit as others. But the reality is fiscal headspace is an issue for a lot of countries. Even though Spain is doing particularly well at this moment, it's not always been the case. How worried are you about ensuring the right fiscal position for Spain, even as these huge defence ambitions have come to the table?
Well, as I said before, fiscal consolidation, fiscal responsibility is one of the key drivers of our balanced growth model. But it comes together with growth and competitiveness and the defense of the welfare state. These are the three pillars. And so the three go ahead together, as I said, in a positive feedback loop. And that's what we're witnessing today. So we need to grow, and that allows us to get some fiscal space to increase our commitment in terms of defense and security as well. Just to look at what Spain has done over the past few years in terms of our commitment on investment and spending in defense and security. We've doubled our share of GDP in terms of defense and security spending for the past 7 years since this government is in place, and with a very large increase this last year in 2025, 40% increase, so that we can reach the 2%, which was actually a commitment for 2029. We did put it forward to 2025, so that we can show our allies that we are willing to go ahead and do our fair share in terms of the security and defense efforts. And this is combined, as I said, with a strong growth component and with the protection of the welfare state, which is also key to ensure sustainability going forward. Because we have to grow, but to grow with a purpose as well. There
are dual challenges here. The one thing, having Europe as a secure Europe, given all the challenges on its borders now. But the other point is around ensuring that there is a growth driver for Europe. Is defense truly an economic driver? Because some economists see it as purely consumption.
Well, that's another of the big challenges going ahead, that we need to increase our spending and investment in defense and security. And it has to do mainly with what we have to do on innovation and on development of our own defense industry. So there's a transition that we have to provide for our own defense industry companies, so that they can benefit also from these big spending and investment effort, and we can all gain from a big multiplier from these investments, so that it's not just money going abroad without decreasing our dependency. So we can actually gain on both tracks, reducing our dependency from other actors and also benefiting our own domestic industry. And at the same time protecting Ukraine, for example.
Yes. The world economy is focused on one big trend, and there's AI. The momentum we've seen in stock markets, the momentum we've seen in private markets, it is a story that investors are very keen to play. How do you think Spain is positioned around AI?
Well, just look at how much investment is coming to Spain. Since 2018 to 2024, Spain has been number 4 in the world in terms of greenfield investment in digitization and AI. That gives you an idea of the big drive. I talked before about green energy and digitalization, and this has to do with our drive towards really modernizing the Spanish economy, providing for all the infrastructure, the necessary infrastructure, but also the necessary development, AI software development that comes with it, and from which I think we will be able to benefit as well.
Do you think there'll be productivity gains for Spain? And we were just talking about the challenge earlier of the labour market. Do you think AI is going to be something that does bring those productivity gains?
Well, I think we are seeing already in the short run productivity gains. The big question mark is to what extent is this just a step level effect, or is it going to be sustained over the medium to long run? And then I think it will depend on how much we are able to really transform particularly our productive activity. And remember that Spain is a country mainly populated by SMEs, small and medium enterprises, so we have to really target that specific segment so that they're able to really enter the new digital AI world in a natural manner, and they are able to grasp those benefits in the long term, not just in the short run where you can see short productivity gains happening. And at the same time we have to make sure that those gains, they come together with the reinforcement also of the labor market and labor rights and new labor opportunities for higher skilled labor, which actually translates into higher wages, again, which can feed a positive feedback loop around that.
The reality, though, if you asked me to name one Spanish AI player, I couldn't do it. Talking about AI day in, day out, I still could not name a Spanish AI company.
Well, I'm going to tell you one, for example, which is a fast-growing startup which is called Multiverse. You know, what they're doing is they're developing what we called, they're merging quantum and AI, so that they have a software for compressing large language models, which are very energy intensive, very cost intensive. So their compression rate is above 90%, and they're leading in this technology worldwide. So there's just one example of what is actually happening in Spain. I think this very week we had the announcement of a new quantum computer in San Sebastian. We have one of the biggest supercomputers in Barcelona. There's a lot happening, but it's true that it does not get around, because the usual story about Spain is about tourism, which is great, but there's much more at stake now in Spain than just tourism. I
asked the French president a similar question, and now he's got a couple of major companies in France, so let's hope it plays out too well for Spain. Thank you so much for joining us on CNBC.